I'm just going to kick off a few to get us started, and perhaps Ian, to you. You spoke about your experience from your work in Europe, and I guess when we think of the ongoing impact of climate change, you've seen it, very very graphically within some of the work that you've been doing. I wondered, what have you learnt about the nature of flooding risk from your own work that New Zealand should be considering, particularly in the light of what the presentation we heard from Dave Cole?
Well, I think the first thing is that we find it very difficult to manage because we only look at new development. Most of it's there, it's too late. We don't have any mechanisms in society to manage embedded risk other than encouraging homeowners or property developers to change, to change the nature of the home, or even, as Dave said, the state buying up parts of land. So it's really difficult to manage the risk that's already there. And this also links to Malcolm's point about risk reduction. That should be the focus, because we're really poor at managing existing risk, because the planning system just looks at future risk. We don't have any means to look at land use. So one of the things that they did in Europe, particularly in the insurance sector, was whether in the event of a flood, should you have a mandate that should be restored to a flood resilient state. And the consensus was no in the short term, but possibly yes in the long term, as we get more data on performance and exactly how much risk will be reduced by that. So, I mean, just to summarize the question, it's something everybody's grappling with. The nature of the risk has moved, and it's really difficult to predict. And in that environment, then how do you price risk? How do you manage it? And it's about avoiding it in the first place, or having inbuilt resilience.
Dave, would you like to perhaps add to that from some of your own experience? What have you learnt along the way about this process that Dunedin's had to go through, that perhaps you might like to have known perhaps a bit earlier?
Well, I was just reflecting when he was speaking about some of the lessons from the Canterbury earthquakes and the kinds of mechanisms that have been put in place since then. So we have an earthquake, as Malcolm alluded, government pays 60%, local authority pays 40%. That's for an earthquake. What are we considering, or should we consider similar mechanisms for land that is put out of commission, or properties that are put out of commission by the effects of climate change? Is it the responsibility of local communities to only look after themselves in that event, when some of them are going to be much worse affected through no fault of their own than other communities? So that raises the question, do you spread the load over all the taxpayers rather than over only a small number of ratepayers? And how do you argue that, given that it's very slow change compared with a cataclysmic event like an earthquake? I think that those are conversations that need to be had, at a national level, probably between local government New Zealand and the government, because we possibly don't have the mechanisms at the moment to work our way through the effects of the effects of the risks of climate change in a way that's equitable to both the local authority and to the property owners. It's probably not there at the moment.
Malcolm, would you like to add anything into that?
No, I think that's
all right.
Dave's pretty well covered it.
Any questions you'd like to throw from the floor? You've got one here.
This is maybe not so much a question as a comment, and it's for a story that I won't give you the full details of, but I'm going to make a comment as a policyholder. And this is a comment as a policyholder in the UK. And I suppose it's a comment for Ian, and I'm picking up on his slide about the shift in management. I have a house which is built on a river. And as you will know, Ian, that as soon as you put the postcode into the Environment Agency website, it comes up with you're on a flood risk. I also know something about insurance. So I knew what I had to do, because after the floods of 2003, my premiums trebled. I asked the insurance company to send their underwriter down and have a look at the flood prevention work that we'd put in. That was obviously refused, because obviously if 3.4 million property owners did the same thing, they would find it was a very difficult thing to do. This year, I've spent $10,000, the equivalent of $10,000, putting in additional flood prevention work based on some of the new technologies that you touched on. Do you think my premium will come down? Very unlikely. So I think the challenge actually is in New Zealand, based on what my experience is, it's going to be very difficult picking up the theme that's just been discussed, is how do you actually share the risk and manage the cost to everyone concerned.
Yeah, that's a really good point, isn't it? That if people are prepared to spend money risk mitigation and they're not being recognised for that, then how do you create any incentive to do so?
It's a completely fair point, and because that is the situation at the moment, is that because they're not sure how it will perform over time, or I mean, the insurance sector finds it really difficult to price the risk. There's some arguments that some of the smaller insurers might become niche specialists in this area and get market advantage because they understand the technology and understand the specifics of postcode risks. But it's a tricky situation. I mean, part of the argument is that if your excess is 20,000, then maybe by installing these, you're reducing your own exposure until you might actually limit that damage. But I share your concerns that for this market to emerge properly, it needs to be able to be priced. And that means that we need to know how it performs over time. And it's just too new. There's not many areas where it's been used in anger and has been successful. And we also have the issue is what happens if you sell your house and someone else moves in? How do we know they maintain it over time? There's also the parallel issue of some people won't put it on their homes because they're worried about property blight. They won't be able to sell the house because it looks like they are prone to flooding. So the onus is moving on designing things which look like they belong there rather than something which is in a specific flood defense device. But yeah, it's a feature of an emergent market. We worked quite closely with AXA, who were at the forefront of looking at how they manage risk in the UK. And they were quite risk averse about this entire sector. They were waiting and see. They wanted to be involved in its development, but they didn't want to offer discounts just yet.
Can I just jump in there and?
Can I just make an extra comment?
Yeah. Sure.
What we did do when the premium was trebled, we tried to find another insurer, and that was impossible.
I'm just going to observe that there's a couple of variables here. One is the variable that you've mentioned, that you spend some extra money, but the other variable is the amount of risk. And if that's rising and gets to a point unacceptable either to the insurance company or to the local authority. We're dealing with a case right now in Dunedin where some people live on a very unstable hillside. Increased water flows down a natural watercourse have caused some slips, caused some damage, and they are saying to the council, you need to fix this. Now, part of it is our responsibility because there's stormwater from a development above going there, but it's a natural watercourse, so it's always been there. I think what will happen and ultimately is that we will use the Public Works Act and buy the property and take it out. Because no matter what they put in, even if they were prepared to, there comes a point where why should it be the responsibility of either the insurance company or the local council to accept a higher level of risk and potential cost into the future? It might just get to a point where we say, call it quits.
Just one other thing that's not dealing with this specifically, but I get that. The idea, though, around our insurance work is that if we put better information into the market around how we're managing that risk, our working hypothesis is by aggregating that information at a council level, we ought to be able to give much better information to insurers and reinsurers about the nature of that risk and the work we're taking. And so our hypothesis, a better aggregation of that information ought to drive down for our members the significant insurances they take on behalf of their communities, which So at that broader level, we're thinking about that. It's how we're working. We're testing that idea, but I take your point that is not it's not specific. Having said that, another point just occurs to me, maybe tangential, but we are doing another piece of work which I didn't talk about today, but it pops into my mind in response to your question, is around funding of local government full stop. As you know, it's pretty much a rates-based system, or a user pays around regulatory charges. That's pretty much it, unless a particular council has investments in portfolio. But by and large, it's a rate-based system, which is pretty unusual by world standards. You know, we are actually an outlier in that regard. But it does mean that it's difficult to create incentive regimes to get right behaviour if you've got a blunt tool like a rate. So part of the work we're doing, which Penny Webster of Auckland Council is chairing, is about understanding, can we think about the nature of incentives and funding and reward and risk to get right behaviours over time that link to a funding system. So there may be some, so maybe vis-a-vis a property owner, well, it won't go to the insurance premium, it may go to your rates bill or the degree of property tax or whatever other tax you might have. And it just being really clear, we're not arguing for an increase in the tax imposition across the whole of New Zealand. We're all talking about how can we better fund what we have to fund. It's not a money grab, just in case there's a journalist in the room.
I think I just saw that Auckland Council put up rates 3.5% today too. So
well, just on that, can I just respond? I can't let that one go. Yeah, 3.5%. But actually, if you this percentage thing is sorry, I get a big bugbear. But when you break that down into what it is in dollars, in many areas of the country, it's like a buck or a couple of. Let's get realistic about this. It's also invariably linked to CPI. CPI is at 1.7 and rates are at 3.1. But here's a revelation: councils don't buy wheat bix. They buy aggregate and bitumen and pipes and that, which is a lot more expensive than the items that are in the bundle measured by the CPI. We are not measuring the right things. So that's part of the
local
education.
Government CPI.
Yeah, we do have one, but yeah, we are working on it. But it's all part of an education thing. So the issue around risk management, we're going to have to educate our communities about this stuff and about what cost is and where money's spent. And this is a broader thing, and we need to get past flippant remarks about don't take on debt. So who buys a house without a mortgage? Don't have increases over CPI because so we won't have roads. Life's about trade-offs, and it's about making sure our communities understand those trade-offs and the costs, and that's what we will do.
All right, more questions. Yes, one over the far side there.
Malcolm, Dave, you might be able to help out here. Insurers have got a lot of information about flood risk and flood claims in their claims databases, but local authorities have got a lot more granular detail. Is there an appetite for local authorities to share that with insurers? And if there is it possible with the privacy issues around the information that you collect?
That's a really good question, and it also plays to, I think, what is an emerging theme about open innovation, sharing information, more widely. I mean, is there an opportunity for that, do you think?
My understanding is that any information that we have would be in the public domain or could be put in the public domain very easily, either through Official Information Act requests, but I'm pretty sure that the Otago Regional Council has put its hazard database online. So the information is there at a broad level, and at a property level it's on the limbs. So it is all accessible. But I would caution, as I mentioned when I was speaking, that the quality and the granularity of that information differs greatly across the country and in different areas. So in some places, a tremendous amount, for instance, Christchurch will be known about liquefaction. They know a lot about liquefaction in Christchurch now. And in other areas, it'll be about floods or something else. So it won't be, I don't think it would be, well, there could be some danger in treating the information as if it were consistent across the country if you were trying to develop policies around insurance.
And just picking up on that point, it's important that people understand when they talk about local government, it's actually local governments. There are 78 of them. They're all different. So what is in one area isn't necessarily the case
They're
in
all
the other.
independent.
They're all independent, have their different things. Having said that, the point of principle that was raised, I mean, I don't have any difficulty. I would, as long as that we've got a level of confidence around the information, we ought to be operating on the principle of transparency, which is democracy. There may again be grandparent issues we have to deal with. You raised the Privacy Act. I'm not aware that was a problem, but I always get cautious when people raise the Privacy Act as a barrier to actually having good information. We should be we should test that. And if it's actually stopping a proper outcome, then we need to, push back.
And just one other point to add to that is that the irony is in the UK, the debate's on the other side. The local authorities want information from the insurers, and the insurance companies won't provide it because it's competitive advantage. They've spent a lot of money and a lot of time developing databases and tools to manage their risks slightly better than the competitors. And so why should they share that? That's how they price risk slightly better. So the debate is about competitive advantage between the insurers rather than between the sectors elsewhere.
Interesting point. All right, another question over here. Thank you very much.
Hi, good afternoon. Ian, a very good reminder for me of the times managing the floods in the UK and also how the issue developed from an insurer's perspective. And there was quite a difference there. We talked earlier about new entrants having a significant advantage over long-term players in the market, and the undertaking that insurers had to continue flood insurance. And one of the things I was interested in was, in that case, there was an intent from the government to invest heavily in flood defences that didn't come through, but the continuation of the undertaking. And I was interested in certainly Dave's views of the development of the district plan as to how those sort of cost-shifting arguments are considered in the development of the plan, where insurers at the moment may be continuing to provide flood or other natural hazard on the basis that defence mechanisms or hazards will continue. And I think it's fair to say that the availability of flood mapping was vague for many years until recently.
And just to pick up that point quickly, just for those of you unaware, in the UK there was an agreement between the insurance sector and the government that essentially the insurance sector realised that they were paying for a lack of investment by the government in flood defence. And so why should the sector do that? And so unless they was going to invest heavily in flood defence, they were going to pull out of the sector, or at least change how they do business in the sector. And that would mean many homes are uninsurable, it would really affect the property market and so on. And so they agreed to fund at a certain amount each year to allow flood defences to be invested in. And they failed to produce that when the new government came in with the austerity measures. And so there's debate about a change in guarantee between the insurance sector and the government and a new statement of principles. And that's why the gentleman at the front who had he could get one quote from one person because that was the guarantee, is that if you already insured someone, you had to carry on doing it, but new entrants would not touch any big risk. So at the moment, they're talking about building up a fund, a tax. So over time, that would build up to just be an insurance-wide fund to enable the catastrophic events to be catered. But they're looking at different models of funding it if the government aren't prepared to fund it themselves.
Okay, we've got time for one more question if anybody wants to pose one. Dave, I'm just intrigued for a little more about the house that got approved, provided it had a dinghy hook. I think that was brilliant, and I think you seem to suggest that wasn't that was one that they were able to achieve by pushing through the RMA to be able to achieve, and what you weren't left with a lot of ability to stop it.
I'm a bit vague. It was before my time, but my understanding is that at least one of the two councils, either the regional council probably, or the city council, opposed the consent, but it was taken to the Environment Court, and the Environment Court can overrule. But the interesting thing was that the Environment Court used the district plan So the point is, that I guess to take from that is that up till now, district plans have not been a useful place or tool to deal with hazard risk.
And you think now, as a result of what you have achieved, you're in a much better
I think we're in a better place,
situation
but I don't think, certainly with the effects of, say, climate change, that district plan, the incorporation of hazard risk into district plans will be enough.
Right.
I think there will need to be more done. And I'm just thinking about, insurance cover. I'm sure that place might have had a dinghy hook, but I bet it didn't have an insurance cover. But I was thinking about using the information from councils, and where do you put the baseline? Because just because risk isn't identified doesn't mean it's not there. There's so many, in some places there'll be so many unknowns. So, I think we're certainly improving what we're doing by way of incorporating these things into district plans, but I don't believe it'll be enough.
Okay.